Now, Oatly has had a really tough time in the last period, considering the short report and its allegation towards the company. As many of you probably know, the stock plummeted after. But today, initially, we saw the stock price actually going up to new heights again. And I think one of the reasons is the Q2 report. And that is going to be our focus here today on the PlantStock channel. If you're new to this channel, welcome. If you're not, then welcome back. As always, I would truly appreciate an early thumbs up since it does help spread the video to more people. And if you are interested in companies in the plant-based sector like Oatly, Tattooed Chef, Beyond Meat, to name a few, make sure to subscribe and don't forget that bell button. Thank you, folks. I truly appreciate your help. Now, if we take a look at the stock chart, ticker symbol OTLY, and the NASDAQ, we can see that in the last couple of days, it's had an even rougher time, falling down from about $19 to $20 down to $16 at its lowest. And we know it's been way worse if we go back about a month. But today, when the market opened about 2 hours ago from when I filmed this video, it actually flew up to around 6, 7, maybe even 8%. But right now it's gone down again to around 1.7%. And obviously, I believe that one of the biggest reasons that actually flew up as much as it did, and who knows, during the day it might go up a little more again, is that they actually have some pretty good results, or actually great results. And before we go into looking at how much of a revenue they actually got, we can see that when it comes to where they have their market, we can see here at EMEA, that's basically Europe, the Middle East, and Africa, mostly Europe. They're now covering there around 39,000 retail stores, right? And about 10,000 plus food service locations. And the oat milk brand is the number one in those markets at the moment. And we know that especially in Sweden, England, and Germany, that Oatly is really big, right? They're the number one brand when it comes to oat milk. And when we take a look at the Americas, meaning mostly the US here, of course, also is now at about 16,000 retail stores, and then about 26,000 plus food service locations. And I know that when it comes to Starbucks, that's really big there. And there it's the second biggest oat milk brand. And they're doing really well in Asia as well, about 18% of the whole revenue. And it's about 10,000 retails and specialty doors and 24,000 plus food service locations there too. There's apparently in China selling in Pizza Hut and McDonald's as well. So, and KFC and Alibaba. So looking great there. So if we actually take a look now at the revenues that they had for this quarter, it is actually very impressive. If we take a look here, last year they had 95 million. This year is 146 million, which is a 53% increase. Really great numbers there. And we can see that one of the reasons for this is broad-based growth across all regions and channels. The filled rate levels remain low across regions as expected given ramp up in production capacity, which is a big part of this. The food service channel increased compared to last year about 33% versus 22% in Q2. And something to keep in mind here is also that it ended Q2 with the highest production output on record. So looking good there. When it comes to their gross profit, we can see that last year it was around 32.3%. Now it's 26.4% according to this report anyhow. 31 million last year, 39 million today. And here, one of the reasons is, as they state, strong demand for our product has increased our need to rely on co-packers in the short term as new capacity is being built. And obviously, if you have to rely on others, your margins will be less. And this is a temporary thing according to the company, right? It also impacted higher logistics costs, regional channel and customer mix, minor negative effects from foreign exchange. And when we look at adjusted EBITDA, We can see that it's way lower this time, way larger losses this time. It was about 1.3% last year, now it's 21.8%. Last year, about $1 million, now about 32. And this is related to loss due to planned growth investment and new recurring expenses associated with being a public company. And also the having to increase their personnel from about 600 to 1,500 people, which is obviously something that's going to cost money. Higher branding and marketing expenses as well. And when we look at the CapEx, it was about 25 million last year, 89 million now, which means that they're continuing to invest in capacity to meet the surging demand. Investments primarily focused on Ogden, UT Ma'anshan, China, Singapore, SG, and Peterborough and UK facilities there. So if we take a look at how much they actually increased year over year in the different regions, in specifics here, we can see that in mainly Europe here, Middle East, and Africa, it went up from 60 million to 79 million here in revenue, which is 32%. That's really good. It's like it stated here, an all-time high production in the European area then. In the Americas, in the US, we had a way better expansion here in revenue, about 65% from 25 million to 41 million. And also here, as this state is all-time high production in the Americas, right? And when it comes to Asia, even more impressive there, 150% increase here from 11 million to 26 million. And then if we take a look at the total here, as we stated before, 53% is what they managed to increase their sales with, from 95 to 146 million. And something I thought would be interesting to take a look at, because it's important for their future growth and expansion, right, is their capacity, their overall capacity to actually produce more liters here, right, of their liquid products. And you could see the growth here from January up until July, and it's gone quite quickly, hasn't it? In April, it was around 35.5, and now it is up at 45.7 million liters per month. That's looking good. And if we take an overall look, what they estimate for this whole year, they estimate that they're going to be up to about 600 million in total for the whole of 2021. That's amazing numbers. If you take a look at where they were at last year here in 2020, that's basically doubling it, right? And if we take a look what they estimate to be able to produce 2022, they're almost doubling it there too. Not quite, but almost 1.1 billion liters. And then in 2023, we see this number, almost 1.5 billion liters. So that's the kind of thing you need. That's what you want to see if you're going to expand the way they're talking about doing, right? And then the really positive news is what they actually hope or believe that they'll get in revenue by the end of the year. Last year, as you know, they ended about $421 million in revenue, which was pretty good, I would say. And then you could see that they are expecting this year to reach almost 700 million. That's incredible numbers. That's a 64% growth year over year. Obviously, we don't know that as of yet. It could be less, but it could also be more. It's depending. And the kind of deals they seem to have on the table, I wouldn't put it past them. I think we should take a quick look also when it comes to their non-GAAP financial measures, their reconciliation. Now the last 3 months ended. There was a loss for the period attributable to shareholders of the parent was about almost $60 million, and the year before that was only $4.7 million. So if we look at the EBITDA, about 43 million in loss. Last year, 1.2, and adjusted, as we talked about before, 32 million compared to 1.2 million last year. And obviously, this is not a super good sign, but to be expected to some extent, considering the way they grow at the moment. So in conclusion, it really does seem that as a brand and as a company, their products are in high demand. And at the moment, the positive thing is, it does seem that they are able to handle this, right? The demand. It's not about just having demand. You have to be able to produce that product that is actually wanted out there. And it seems that they are doing that and they are able to scale it. So long term, it does seem that Oatly is a company that you can count on. Now, even though that the company is trading around $17 at the moment, this company is still overvalued. There's no question about that. And it might take some time before they actually grow into the valuation they have now. But I do believe long term, there's probably a good chance that they will do that. But you need to be vigilant because they are not profitable at the moment. They are at a loss, and it might still take some time before they actually reach that profitability. So this should always be in your mind at the moment if this is a company you want to invest in. And yes, at the moment, the stock seems to be lifting up a bit more than it has for quite some time. But that could only be temporary because the issues with the short report hasn't really been addressed yet. And we can see that there's still an ongoing call to action from several law firms out there. That means that investing in this company might be a bit risky at the moment. And I just want to point out once again, I still think there's a possibility that this stock will keep dropping in the near term. So this is something you need to consider if you are interested in investing in this company or if you're interested in investing more. So to sum this up, it does really seem that the company is doing well, but because of the short report, but also remember when it comes to the inflation right now, when it comes to the D variant, there are things here that are a bit risky. But if you're vigilant, you might do really well long term. Well, that was it for today, folks. I truly hope you got a lot of value from today's video. And if you did, make sure to smash that like button and help me out. And if you want to keep getting more information and analysis regarding Oatly, the very good food company, maybe the chef, the tattoo chef, or Beyond Meat, to name a few, make sure to subscribe and don't forget that bell button. Thank you, folks. I truly appreciate your help. And as always, do not forget, this was not financial advice. These were just my own thoughts and opinions. It's important to do your own due diligence and invest safe. Guys, I hope you have a wonderful Monday. Hope to see you soon and peace out.